So guys, it's been a while since I dropped a new video on my channel. So today I decided to drop a new video for you guys. It's really been a while. So if you're watching my video for the first time, kindly like, subscribe and share. If you're already my subscriber, kindly rewatch the video to understand exactly what I'm trying to explain here on the video for you to be consistent and be profitable. This was a trade I took on US30. That was on the, should be around on the 20th of May. Yes, 20th of May. I held the trade about 3 days to the 23rd of May, 23rd of May. So we have a three candle formation here. This was the first candle. This bullish candle here. This was the second candle. This was the third candle. And if you see the third candle fade to come to fill this imbalance. So what the price? The price was big. Price was busy accumulating liquidity below this second candle low here, which is why I mark this S here. So this is how you can avoid unnecessary stop losses and unnecessary loss, guys. I was patiently waiting because I moved down to lower time frame 4 hour to see what price was doing. When I moved to 4 hour, I saw that price respected this candle here, push up, take out the high, induce early buyers. Then what did price do again? Price came back to this FVG here, respected it, which early buyers would think, okay, market have started to go their direction. They will decide to add more position. Immediately you get change of character, which was around this place here. You can see. Then what the price did, price came back, sweep early buyers again, those who bought from this low, thinking it was change of character, sweep them out, continue higher again. Price failed to create another high. Price did what again? Sweep this low with this candle, then induce more buyers again, create another high. I didn't buy from all this one. I was patient waiting, guys. You can see this was a demand zone which a lot of you would have bought from. So you can see break of structure above this side. That's why I mark it with blue line, break of structure. So a lot of people will be waiting that once price come back to this demand, they will buy. What the price will sweep all of them out. Why? Because we have liquidity now below this candle low here. We have liquidity below this candle low. So what I did was I waited for price to take out the liquidity because that's where the real move happened. So immediately price took out the liquidity, took out all these buyers I was trying to buy here. I did what? I moved lower to another time frame. I went lower to 1 hour to see what price was doing. Then remember one thing, guys. If immediately price have taken liquidity, notice one thing. We always have inverse FVG. You can see we have from that three candle formation here. This was the bearish candle. The bullish candle swept the low of the bearish candle and went up. Now this third candle was here. What I did was I waited for another confirmation, but because I didn't see the trade on time, unless I would have entered the trade just like this, stop loss below this low here, because this was my liquidity block. Because if we went out to another time frame, you will see that price was accumulating. Let's go to 15 minutes so that I can show you guys very well. Okay, if you see this zone on the 15 minutes, you can see that price was busy, early buyers was busy buying. What the price did with this particular candle, swept all the low, swept all these lows. Let me mark it with this line. Swept all these lows out of early buyers. If I zoom out, you see that. Are you seeing it, guys? Swept the lows and decided to do what? Went higher. So now this is my liquidity block. I mark it out on 1 hour, but unfortunately I wasn't active on the chart that particular time. So that's why I took the trade later the following day during New York session. So this was how you would have caught the trade. The target, the opposite liquidity. Why this was the opposite liquidity? You can see immediately price was selling, was coming down. This was supplies. A lot of people was busy selling. This was one. Price respected this high, sold down. This was another one. Price respected this high, sold down. Now this was another one. price respected this high here. This supply slowed down. Now this was another one. You can see price swept this high, then did what? Create equal highs here. Price respected this high multiple times. If we drag this, if we drag this, if we drag this thing to the front side, to the right side, you'll see that price respected this zone part a lot of time. Why now we know that there is liquidity here, there's liquidity here, there's liquidity here. So your target should be opposition liquidity, which is sell side liquidity. Remember, guys, don't be greedy. If you want to be profitable in this forex trading, don't be greedy. If you want to be profitable in this forex, this financial market, guys, don't be greedy. So this was the target. You can see you can target, yes, 1,000 points, which is about 100 pips. You can still look to the left to see if there's another target which you can probably target. Yes, there's another target. Why? This was why there's another target here. This I pull back, respected this demand, tried to buy back up, but what the price did, price swept this high here for early sellers. They went back down, swept close below this low. Now sellers did what? Immediately price pull back to this extreme. Seller do what? They sold. So now we have more liquidity. I usually mark my liquidity with this blue line. You can use any color of your choice. We have more liquidity in this high here. So if you know you have that psychology, you have a strong psychology and you can take your time to hold the trade to this particular high, you would have made more money. You can see, guys, you would have made more money. And which was what the price did. Price definitely hit that target. So I took multiple trade. I took this trade here. I don't want the video to be that long. I took the trade here from, let me take this thing to the side. From this my new zone. When I saw that price did what? Look at it. I mark it again. Are you seeing it, guys? When I see that price swept those that are buying from this low. So this was my liquidity block. I took my buys from around this region because I wasn't active in the chart. So if I check my notes where I usually do my journal, let me show you guys the particular trade, 2026 journal. You can see this was the trade I took. Okay, look at the trade here. Are you seeing it, guys? These are the screenshots of higher time frame from daily, and this was for 15 minutes. I took multiple positions, which I usually use to. This trade took me about. This trade gave me about 5% on my profile account, which I will withdraw within early next month, and I will also post a video about the withdrawal here for you guys to see. So that is all for this video, guys. From now, I'll be dropping more videos for you guys, more content for you to understand how I trade. Because right now, I'm usually using the higher time frame. My concept of higher time frame to pick my zone is I use FVG to know price direction. While lower time frame, I use liquidity. I wait for price to sweep liquidity, either buy or sell if I decided to take my position. So that will be all for this video, guys. See you on the next one.